Hi everyone. 2 weeks have passed. Welcome to another market talk. We see some interesting moves in the markets. I'm very interested to see what Raphael and Raghav sees in markets also. I'm looking at XLU and I'm really excited to talk about that. So yeah, today we have a new face, Raghav. He's a my fractal range power user, so I'm really excited to hear his thoughts and his process and positions and basically what he sees in the markets. So yeah, and I know that Raghav has a hard stop, 1 hour in 45 minutes. He will need to leave, so we will start from you, Raghav. First of all, thanks for joining. And yeah, so you've been a user for a long time, and so what you see in the markets, what your positions are, and what you expect.
Yeah, thank you, Vai, and thanks for having me. I'm really excited to be here. First time ever on the Market Talk. I'll start sharing my screen, and then we can try to see what I'm observing. So I have my fractal range open, and the first thing, as we always do, is to look at the correlations. And I have some notes on the side, and I'll try to talk through them. So let's go to the default correlations. So default correlations, I have 5-day and then 10-day and 30-day. I'll start with 30-day. So if you look at 30-day, there's no clear regime over here. So we had UUP and TLT negative, which was kind of the Trump trade. Basically, the dollar was going up and the rates were going up, and that was the Trump trade that we were seeing. In the last 10 days, we have seen some changes. And what you see is the UUP to TLT is negative, and the TLT to the GLD was also negative. And then the TLT to the IWM was also was kind of a positive. So this was almost like a reflation trade where the dollar is going down, the rates are going up, and the small caps and the Bitcoin and everything was going up. So this was like a kind of reflation trade. So there was a big switch that happened within 10 days. And if you continue looking forward, if you look at just the 5 days, there's again a very big switch that happened. And this time the UUP and TLT became only slightly negative instead of very negative, and UUP and gold are positive. And then if you see, TLT became positively correlated to all the equities, IWM, QQQ, SPY. And we will look at XLE later, but TLT and XLE also became negative. So this was, I feel like, almost like a stagflationary kind of regime that we saw in the last 5 days. So there have been a lot of moves in the last 30 days. It's been very hard to read through all the correlations and come up with like a consistent methodology across all of them. What I expect is basically we need to see how TLT, or basically the rates, and the dollar behaves in the next few weeks, and that might help us in understanding of where we are in the whole equity cycle. Other than that, I wanted to quickly show about the new customer relations that we have received in MFR now. And I wanted to specifically talk about the dispersion. So dispersion, I look at how the short wicks, so when the wicks is getting sold, and how the different constituents respond to that. So let's look at the 30-day first. And you see in the last 30 days, the VIX was getting sold, and basically it was a boost to all the sectors, the growth and the value and MAGA 7 and QQQ and SPY, IW, and everyone. However, in the last 10 days, which was similar to the reflation trade, you saw that when the VIX was getting sold, the IWM and the value was had a stronger correlation, which is similar to the correlations we saw in the 10 days for the reflation trade we were seeing as well. However, in the last 5 days, what we have seen is that now there has been a switch towards growth. So growth and QQQ and Mag 7 were getting better response. So the question basically, we are seeing all this, and the question remains is which of the regime change will continue. So in the 10 days, last 10 days was reflation, last 5 days kind of stagflationary with more focus on the growth and QQQ and Nasdaq high momentum stocks. Is that the 5 day regime going to continue, or is it going to reflect back to the 10 day reflationary regime where the small caps, etc., are going to come back? Now, in terms of how do we use this data and use it in the charts, what I am looking at is in terms of charts. Let me move this to the side. So let's start with the rates. So the rates, if you look at, I'm looking at the 10-year rates over here. They are super bullish. They, in terms of MFR indicators, this is the box that Raphael had been talking about for the last few months, and it broke out of that. It became bullish. It came back to test the MFR trend. In terms of Fibonacci, it didn't even go below the 50% Fibonacci at all. And today it gained back above the trend level. It is up down ratio is definitely extended. So there's more downside right now. There are there's downside caps as well. Now, there's been a lot of talks about the rates are topping and as such, but I am not seeing that a lot in the rates in terms of the charts that we are seeing. In fact, there is a lot of opportunity on the long-term range. My best guess at this point in time is basically this will, because of the ranges, it will get pushed down and then it will bounce back. But I have no clue how it's exactly going to do, but that's my just best guess. In terms of the longer term volatility, if you look at the vola trend, the trend of the volatility of the US 10-year, you see that the volatility has come down, and these are the daily minimum levels that it's supposed to hit and then bounce back. And we see that this is hitting the 5.1 level and it's bouncing back from that. Now, the question is it going to bounce back from here and go up and the rates will sell off? Or if we backtrack and do a back test against, let's say 2023, where it keeps on getting sold off for a long time and the rates just keep on going up. We saw something similar in 2022 as well, where the rates just kept on going up and up and up, and the volatility was or the trend stayed low. So the question is, are we in the middle of regime change? Is the volatility trending to stay low, or is it going to bounce back? And that will answer quite a bit of our questions. The similar thing I'm seeing in the interest rate hedging called PFIX. I use that to understand how the rates are behaving. It behaves very close to 10-year, and I'm seeing similar things. There's a downside cap, and momentum is picking up as well. Now, that's for the rate side. And in terms of dollar, the dollar very bullish. Again, it went so much up, it has pulled back a little bit. Again, the very important thing that we are seeing is that there are downside caps are coming up soon. Maybe by next week we'll have downside caps. So maybe if we get a sell-off in dollar, it might bounce from here, and the long-term range are showing higher highs again. In terms of the overall cycle, what we are seeing is that, again, the trend of the volatility of UUP hit the daily min, and this has been the stopping point for most of the recent bull markets. However, if we go back and backtest again 2023, we see that the volatility can stay low for a long time. And similarly, when UUP was a big winner in 2022, you could see the volatility kept on trending towards the lower level throughout 2022 as well. So if they basically, the big if is, are we continuing to be in a bull market? If we are in bull market, we should expect this bounce to continue and dollar to sell off. And if it's a regime change that's happening and we might enter a bear market, then we might see this volatility continuing low and dollar continues its upward move in the next few weeks. So these are the macro things that I'm looking at. I'm following Raphael's 3-step process that is needed for the VIX to become trending and non-episodic and going up. And it seems very far for now. Like the trend is below the trade is below the trend. The there the If you look at the trajectory of the trade, it doesn't seem like it's going to meet anytime soon. It seems like it's like a sideways movement. So for the second step that needs to happen is trade above trend and then the retest of the trade. So it seems like the whole VIX situation is not looking like it's going to change very soon. Now, coming to some of the assets that I'm looking at. So this is the GC chart, gold chart. We had a buy signal, a very, very solid buy signal from the MFR indicators, and it got capped. And if you look at the technical indicators, some people might look at it as a triangle breakout, and that happened today. And what I'm seeing is that in MFR indicators, it regained the bullish trend, and the low end of the ranges all are pointing up. The long-term ranges are all pointing up. This looks ready for a big move up. Similarly for silver, it barely closed above the bullish signal. We need the momentum is on the way. We need the 30-day and the 90-day to start catching up, and there's a huge potential for these to catch up over the next few weeks. This could be trending up for a long time as well. In terms of the XLU, I know Wai is going to talk more about it, but it broke it became bearish today, and especially because we have downside caps on 10-year. Let's see how this behaves, but I'm watching this very, very carefully. The next one that I wanted to talk through was the oil, crude oil. This seems to be bottoming. If you see closely enough, the trend of the Walla indicator is pointing up. We also have a slight increase in the MFR trend as well. We had a higher low. So if you see this low here was higher than that, I think it's going to take some time to become trending and bullish again. If we go back to the previous instances, ideally it should go up, become bullish, and trace back to the trend, and then it should become trending bullish signal. So it is probably a month or so away from becoming trending bullish. I posted this on Twitter. I want to talk through the IWM. We have had some sell-off recently in the Russell space. The matrix has been sold. It tested trade today, and the up-down ratios look very good here. Now, if the CPI turns out hot and we continue the stagflationary regime tomorrow, this might sell off further to the trend. But if we switch back to the reflation, then we'll have to look at the correlations again. If there is a switch back to that, this might start trending upwards as well. So it really depends on what kind of macro signals we get tomorrow. Other than that, I'm seeing some very interesting things on the China side as well. This is the Hang Seng Index. Hang Seng Index, as you saw, had a huge move earlier in September, and it has done an ABC kind of a correction and a pullback, and now it's trying to become bullish again. The momentum is on its side. There is a more opportunity for 30-day and 90-day to catch up as well. Very importantly, what I'm seeing is that this trend is now volatility trend is now curving upwards, and you can see in the trend of the vola indicator here as well. So it's curving down as well. So if it goes down and tries to at least um, bounce back to the trend, that might be multiple weeks of bullish signal that we might see. The short term ranges are not supportive, but in terms of long term ranges, there is like a huge upside, and the long term MFR range is showing higher highs. So this might be quite a bit of a good signal that I am seeing right now. And then I posted this about JD about like a week back, and JD was looking really good. We had this one of these stocks on the China side. There were downside caps, but the upside downside ratios were not favorable. So it sold off a little bit, and then it didn't even go bearish, and it jumped right away. This slight pullback today, it's looking good. It's still bullish in terms of the vola trend and the MFR trend. And again, the same things apply. The long-term ranges are looking very bullish and showing higher highs, and seems to be a good signal. And this is a leveraged China ETF. So these are the things that I'm looking at. I am more bullish on IWM right now compared to QQQ, mainly because of the signal that I'm seeing again on the dispersion side. If we look at the reflation trade, the 10 days, if the CPI comes in as expected, and if you look at the term structure of the SPX is very high, and if it's expected, the VIX should volatility should sell off, and if that happens, I'm expecting short VIX to go up, and with that, the value and IWM and RSP might go up as well. So these are the different scenarios I'm seeing. Obviously, a lot of regime mix is very hard to see things very clearly. It really depends. The macro picture is changing every 2 weeks, and it really depends on how the dollar and how the rates behave in the next few weeks. Yeah, that's my side of what I'm seeing in the market.
Great insights. Thank you very much. Actually, I saw that you are looking into gamma stuff, and I know from our previous video that you are looking into options stuff quite a lot. Can you elaborate more about what you are looking for, how things like gamma and other option-related tools help in this process? Yeah, so basically what
Yes.
you're looking for there.
Yeah, definitely. So we have recently we had a new enhancement in MFR. So now we are able to get a put wall and call wall in our portfolio as well. So now, apart from looking at just the normal term ranges, I use these gamma put walls and call walls more as well. So if the up down ratios are looking favorable and the lower end of the range is closer to the put walls, that's again a signal for me to know that there is a very strong support for that. And I use that gamma in my analysis as well. Yeah. And this thing is available for like almost all the tickers, so it's really good. Yeah.
Thanks. Interesting. Okay, we will see if we have any questions since you are here. But now let's go to Raphael. So Raphael, I know that you had some interesting signals in the market. So what's going on and what do you expect?
Hey guys. So yeah, as you know, my only position right now is long gold. So since the trigger that Raghav mentioned from my buy the dip script, So basically, my macro guys, they are seeing complacency in stocks, and they're I have to have two legs, right? I have the signal that I have the macro, and the macro is not supportive for taking a huge bet, and I like to take big bets. But I have to say, if I had acted on the signal alone, there are many buys that I would have done. So I will show you when I arrive at the single ticker at the end of my intervention to give you some example of where you can use signal despite macro to take some position. So I'm going to share. Okay, should be working. It's working. Yes.
Yes.
Okay, good. Okay, as usual, I'm gonna go with ES. So I posted that on Twitter that I got sales on ES and NQ. So you can see them here. There are the S with the stars here. And you can see in the previous instances, what you get is a sell-off or consolidation before the next leg up. So I had 3 sell triggers, and we are currently in the sell-off phase. It matches with the matrix end of the cycle. We were also at the top of my fractal range. So it usually you usually get the sell at the top of the range. So everything matches together. For now, volatility looks great still. I mean, it's pointing down, trade is pointing down. So there is not a lot of worry regarding ES. Despite the fact that we are right after the sell triggers. So what I'm watching now, and again, there is a high chance I'm not going to take the trade. But what I'm watching now is tomorrow and the day after tomorrow to see if we're going to break the low of the range when we have a sell-off, for example, here, what you got in September, or if we're going to hold the low of the range here, like in October. As mentioned for the past 2 shows, my expectation is still to have rally into the beginning of Q1 before starting to experience some turbulence. So the scenario I favor would be that tomorrow and the day after tomorrow, we try to break the low of the range, but we can't. We hold for a few days and then we start the next leg up again. So, but I'm still open to the fact that maybe we're going to get a deeper sell-off, maybe back to trend, etc. But for now, I'm definitely not thinking of buying for the past few days. I just got to sell. I have a matrix rolling. I'm thinking we have a few more days. The only question is where to. I'm going to talk about VIX afterward, but yeah. Something I also pointed 2 weeks ago was the fact that Hearst for SPY and QQQ are still unable to get back to levels where they were a few months ago, let's say. So it was at 0.76. Now we are still like we were last week and the week before in the high 60s. So to have a trending market, you need to have a strong Hearst. You need to have the certainty that the next day is gonna keep being like the previous day. And so far, for the past 15 days, it's the same song. We are unable to have a trending market. And to me, again, it's with what I said about what my macro guys are saying, it's a confirmation that it's very difficult to take a big position when you see this kind of clues. So of course, after today, we are very near the low of the range. You can see in QQQ, in SPY, yeah, you look at this upside downside ratio. They look very nice, but you need to consider also other stuff. So yeah, again, I'm gonna wait for another probably 2 days, and then I'm gonna consider if I take a small bet to have fun, or if I'm just gonna say, okay, I'm just watching, and I'm sticking to gold only. Now let's go to Europe and Japan. So Germany was a surprise because we had CAC broke trend in the I think it was before the last show or the same day as the last show, and I was expecting DAX to follow, but actually Germany held trend. You can see here it held both my volatility trend and also MFR trend. And the volatility we experienced at the time, so volatility was back here, and now it's just all gone. Volatility is back down. We confirm trade here after confirming trend, and then poof, everybody was bearish, just got wiped out. So my guess is, or the move here is all the people who were expecting through their own means, through their own signals, a break of trend on DAX. And clearly, when they understood they were wrong, they just capitulated, and that's how you get the move. And you can see that DAX is also showing signs of sell. So like you had here in August, so you are experiencing the same thing here, some sell. So it's confirming that maybe today is not the day to buy sells. I'm going to show you some other signal on single stocks as well, but it's also telling me maybe wait a little bit to take a bet. Now CAC, so it broke trend here, confirmed. This is when we had it was before the show, and tried to reclaim MFR trend and my volatility trend, and so far it has rejected this attempt. So we should see. I'm definitely not looking at buying CAC, but you have the sales on the ES, you have the sales on the NQ, you have the buy on VIX, you have the sell on DAX, and you have CAC rejecting its attempt to reclaim trend. So definitely, if you are a buyer of CAC, if you still are holding long CAC, I hope you got out yesterday. Now let's go to Nikkei. So Nikkei, to my opinion, is an outlier. So for the past, I would say 2 months almost, Nikkei was in a chop. So I've told that for some time. And what happened in the past, let's say 1 week and a half, was a surprise to me. So what you got was it held trend, MFR trend, it held my volatility trend, and you are almost with trade crossing trend of vola. So if you have followed this channel for some time and you have seen me explain what it means, you know that this thing is quite important. So the people looking to buy Nikkei, these things should be very interesting. There's a possibility that Nikkei is finally going to get out of its chop that it has experienced for months. So if I were interested to buy Nikkei, I would look for what's going to happen in the next 2 weeks. There may be a dip to buy with low risk, because you will have trade to cross trend, and even if it doesn't work ultimately, you will get a push higher when this thing happens. So watch for the next few weeks. If you want to buy Nikkei, there will be a dip to buy and probably a push higher, and then you can decide if it can become a long-term trend, a long-term trade, sorry, or just okay, getting stopped out if we break again trend. But to me, this is a big change for Nikkei. Now DXY. So on the last show, I mentioned that we were having we were having a cap on the MFR range. So what you see on these charts I'm sharing is basically what you get from the MFR website, but shown visually. So the blue and the pink here. Blue is the top of the normal range, and pink is the top of the long-term range. And on the 14th, you had the upside cap on MFR. What you get when this happens is either a sell-off on the DXY or range trade, so consolidation before the next leg up. So what happened was tried to go, failed, and you started to get here what seems to be a consolidation, not a sell-off. And I'm thinking consolidation because at the same time we started to see this thing go down. We had the matrix cycle happening on the way down, and it seems that the matrix cycle is starting its cycle up, and we didn't have a big sell-off on DXY. So if matrix start to go up and we start to make higher highs, higher lows on DXY, I think this is the next leg up on DXY. Especially now the cap on the upside is gone. It was gone since 27th of November. So I heard a lot of chatter of people saying that DXY has stopped. Same guys were saying that yields are top as well, by the way. And so far, I'm not seeing that, or at least if you were short the dollar here, you should have taken some profit there, because now you are in a coin flip. I mean, it's very hard to say, okay, it's going to continue. At least we're going to get some kind of rally, and then you can decide if you want to add or if you just get stopped out. But so far, I'm not seeing the top on DXY. I'm seeing actually the next leg up starting. Now to VIX. So as I mentioned, I got buys on VIX. So those buys are not, they don't happen every week, right? And they are not signal to say, okay, let's put the house on the bearish bet, right? They are just saying, okay, VIX has bottomed for a few days. We're gonna get some volatility, and then probably a dip in equities that we're gonna buy. So for now, so I got the buys here. Sorry, got the buys here. 1, 2, 3, and as always, we get the move up in volatility, especially matrix is also going higher. So far, I have no reason to believe that this is only 2 days move. I would expect retest of top of the range or retest of trend. So I would be watching 15.7 to let's say 17 in this area. And like Raghav said, I don't think this is a big one, because to really take a bearish bet, you need the 3 steps of VIX. Same thing, I've mentioned them repeatedly. You need to have price of VIX above trade and trend. So we kind of have it now. You need to have trade to cross trend, and we are not there yet. And then you need to see the retest of price of VIX on trade. So we are currently in the step 1 and still no step 2. So let's say you want to take a bearish bet, you need this black line above this red or green, depends where the price is, line, and we are not there yet. So despite the fact that you have buys on VIX, it's not a call for VIX 40, right? It's just saying, okay, short-term vol, and then a dip to buy, and then we see what happens. So not calling for bear market, right? And when I will see the step 2, I'm going to call it. So you're gonna know that maybe it's time to look for taking bearish bets. Now to CL. So Raghav mentioned that he's looking for maybe a trend shift in a few weeks. So far, I'm not seeing it. So it's, I mean, it's very difficult to project yourself in the future for now. All we got so far is 6 rejection of trend. So, sorry, I'm trying to move. 6 rejection of trend. So another 3, boom, boom, boom. Anytime price is trying to go above trend, gets rejected. CL pattern for a move to bullish trend is very similar to what you get in risk assets. So I'm going to show you later Tesla, and you're going to see what it looks like. And I already showed, I think it was in the latest show or the one before, what I'm expecting for CL to look like regarding its pattern for trade and trend before you can take a bullish bet. And we are not there yet. So I'm going to show you later on Tesla what it looks like. And for me, it's not there. Now gold, so I'm using JC, so gold futures. So today I took off for a quarter of my position. I have a big position in this one. As you know, I bought here when I got the buys. I added some more in this area. So of course I unloaded some here. You know this from the previous show and from my tweets. I added some more in this dip that we got, and here I started to sell some. So the reason I'm starting to sell some is because we are at the place where if I'm wrong, it's going to get rejected. Okay, so I got out a quarter. I'm looking to sell another quarter at the top of the range. And then we're going to see if I'm going to add, most probably, and let it ride for the next bull run. But before we can talk about that, we need to see trade below trend and volatility decisively down. So what you want to look for right now, if you are long like me, gold is trade above trend, or here in the Vola script, also that MFR users with the right subscription have access to. You want to see trade below trend here. So black below red, that will become green, or here in the BVB daily, you need to see the black above the green. Okay, this is when you know, okay, now I can keep my position and we are going big time higher. And this is when you make the big dough. So and something I noticed also regarding gold is Raghav mentioned it, is a positive correlation to dollar. So considering the fact that I'm seeing the dollar most probably bottoming, you can see here, GLD, UUP 0.76, very big positive correlation with dollar. Considering that I'm not seeing dollar top, I'm seeing the dollar actually bottoming, dollar up, very good for gold. Okay, it's not bad, it's quite good. So unless this correlation changes, in the short term, I see gold probably going to the top of the range. And now to Bitcoin. So Vi 2 weeks ago mentioned, I think Bitcoin was at 91K. It was at the low of the range, and you said if you are bullish, this is where you buy. But all of us, with Matt included, we are waiting for lower prices. So if you listen to Vi and you bought at 91, good for you. You could have gotten a nice move to the top of the range. For now, so I'm not touching Bitcoin. For some reason that is unknown to me, it's having issues with 100K, right? It's trying to go above, but anytime, poof, getting smacked down. I actually have an idea, but I'm going to get to that later. Vola is not looking that great. It's very choppy. So the blue here, very choppy, not directional. And you want to see directional volatility to the downside. We are not seeing that. It seems to be stuck between bottom of the range and top of the range, not doing much. And I would guess the issue is the short-term correlation to stocks. So you can see here, I'm using GBTC as a proxy. To SPY, the correlation is 0.93. So it's highly correlated to stocks. So if like me, you expected a move down for at least a few days, you are not buying Bitcoin. You are waiting for equities to bottom, and then maybe you buy Bitcoin depending on where it is. So if I'm not buying equities because I'm expecting at least another 2 days or maybe 3 days of volatility or sell-off, why would I buy Bitcoin? Okay, so that's my current thinking. Now let's go to yields. So I'm going to go with the 2-year first. So this one, Raghav mentioned it. So all the 2-year did was go to retest trade. And we have a downside cap almost appearing. So in the 4% or so. We have Matrix also almost ending its cycle, probably now going to start its positive cycle back up. So, I mean, yeah, okay, sure. Yields have top or maybe not. So I mentioned 2 weeks ago, because of what was happening with European yields, that I expected US yields to go down, and I wanted to watch a particular area, so I didn't change this one. You will see the box appearing. So I marked this box, and I was saying, watch your reaction there. So it's where it went, and so far it seems to be holding. It's holding trend, and you have downside cap on the 10-year. You have downside cap on the 30-year. And you have matrix cycle up starting for the 30-year and for the 10-year. So same remark as for dollar. If you shorted dollar, so if you bought bonds here, my suggestion would be yesterday you should have at least taken some profit, because the signal is saying this was a short-term bottom, and now let's see what happens. Now to single stocks, and then I will be passing the mic to Vai.
Raphael,
So,
can I add?
sure.
I'm seeing downside caps on French and German yields as well.
Yeah, and I got a buy signal also on both.
Yeah.
So I see it was time if you bought bonds.
Yeah. I don't know why people are going crazy about buying bonds here.
At least I mean, it was a good call for the top. The problem is now they should say, okay, maybe guys, you take some profit, and because you know how people are, they're like, oh my god, I missed a move, and now we have a little move up, and they're gonna buy, you know, like crazy, and they get rinsed. So yeah, I wanted to point out several stuff in single stocks just to show some interesting things. So NVDA broke trade, but we almost have a downside cap. So in the 126 and change, almost a downside cap. So if you want to buy NVDA, you may get a possibility to buy it if we get some kind of sell-off, a fake break of trend to a retest to the low of the range, because the cap is there, and I don't think it's going away. So yeah, something I wanted to show you, Tesla. So I mentioned switch to bullish trend always looks the same. If you are using my trade and trend indicator, always looks the same. Be it yields, be it gold, be it Bitcoin, be it oil. I've shown you many examples, and you can see here for the people, for the lucky guys who bought Tesla. So you can see here volatility is going down here. You have trade above trend. Here you have the retest of trend. You could have bought Tesla here 240, and here we are at 400. So you should monitor this kind of patterns. They always look the same. Above trend and the trade and trend cross. You have the retest. Actually, you could have bought there. You have retest of trend of trade, and then poof, you have the move. Just put small amount of capital anytime it happens, and you're gonna make a lot of money. And this is why maybe my macro guys, they may be a little bit not enough bullish, because you have this signal, this kind of signals all over. You have had these signals all over. You had Tesla, you had also Microsoft, which I bought, but I got stopped out, if you remember, months ago, and it did the same. You have, look at Vola Blue. It's very nice, very, very nice. You had the cross of trade and trend here, and then poof, the move from 411 to 445. If you have the right product to bet on the bull side, you make a lot of money in this kind of move. Amazon looks the same. So above trade and trend crossed, you take the bet here. Here you have another confirmation. It's holding trends, and yeah, from October 180 to now we are 226. I mean, they are huge move. So anyway, yeah, the macro stuff maybe not enough bullish. At least they don't make me bearish, but then didn't make me enough bullish, and maybe I should have. So again, everything you see here, all the scripts, etc., they are available for the elite subs, and I think I'm pointing repeatedly how I use them, and you can do this at home. These scripts, they work on every ticker that you have on TradingView. So yeah. Anyway, I think I've covered everything I wanted to cover.
Yeah. Okay. So, Raghav, you need to go, or plans changed?
I can stay for like 10 more minutes. Yes.
Nice. Okay. So I'll share my screen. As always, compared to our participants, my presentation will be shorter, most likely, because I'm a day trader at heart. Yeah, but actually I have one new position with options. It's a German DAX. I'll touch on that, but yeah, we'll see how it goes, because now surprisingly DAX wants to go up, which is interesting. Yeah, so first of all, I wanted to touch on average sector correlations, that we're still in a very quote unquote low risk environment. Low risk environment means that majority of assets, so majority of sectors are not overbought, basically not crowded, so not overbought, not oversold. Across all the time frames, and I start from 180 days and go to literally a couple of days. These average correlations are at about 0.4, 0.5. We can see a chart here, and I always monitor this. So, for example, 10-day sector correlation is currently at 0.38, 0.37, which is low. What it usually means that capital is trades are still not crowded, so there is plenty of capital that can go and be injected into a market. So yeah, what concerns me, and Raphael touched a little bit on that, is that I have this watch list with just some things I watch, and I filter that usually by Hurst exponent, from highest to lowest, and surprise, surprise, the lowest values are Nasdaq, NVIDIA, yeah, so basically tech sector. So it's not something you see very often in tech stocks and tech-related indices, especially in the last 10, 15 years. Basically, but yeah, 3-month Hurst, just for those who know, 3-month Hurst below 0.7 is not very strong. So yeah, the longer the period, the lower Hurst values you will get. So for 1 year Hurst, 0.63, 0.62 is not high, but let's call it normal. But for 3-month Hurst is it's quite low, so it can struggle. So yeah, now XLU, my main stock market indicator of the regimes, and finally it broke. We were talking about it for months that there were signs. It broke, and honestly, it's quite hard for me to expect it to come back to bullish trend immediately, even though we have this low end of a regular term range, but based on trend and longer term ranges, we still have quite a decent amount of downside. So how I monitor that, how I use that, if not trading, because first of all, well, what is a good sign that actually XLU correlations to SPY are not going up. So 0.36, which is positive and quite normal for that. But delta, I monitor usually 5-day delta and correlations, how correlation is changing. It's not going up because what it would mean if it went up is that well, if XLU breaks, it can drag down the entire market, which is S&P 500 and of course Nasdaq, based on these correlations. But it's not happening, so it's a good sign. A couple of weeks ago, I was talking about that if we finally see a break in XLU, it can actually help tech stocks, and I think that's the case. I think that Nasdaq will be quite strong. So yeah, if we compare Nasdaq, and then we'll take a look at SPY a little bit later, things are looking quite good. Even if we get a couple of red days, basically in this regime, I will say the same thing I said about Bitcoin two weeks ago, but basically, if we arrive close to low end of regular term range, this is where you buy if you are bullish, and I will totally be doing that, most likely with some options. But if that happens, because I will not talk about things like Santa Rally, December on a statistically good month, blah, blah, blah. I don't use that in my process, but based on everything else, for now, I think that we are in a buy the dip environment, and even if volatility will increase a little bit, volatility will give us some nice opportunities to add to our long positions or to initiate, if it depends on what you're doing. Of course, I'm mostly day trading futures, so yeah, SPY looks the same. Not really different. Strong bullish trend. Ranges will recalculate themselves. Yeah, and actually SPY is even a better buy here than QQQ, which if we go to QQQ.SPY, the ratio that I'm monitoring, it doesn't matter which way you're looking, SPY QQQ or QQQ SPY. You just need to, of course, understand how these ratios work. But Yeah, QQQ SPY is actually quite close to the regular range, and even in a longer term range, upside is not very encouraging. So you need to understand with spreads that it doesn't mean that QQQ is short or in your portfolio, or QQQ is not worth buying. It just means that basically SPY is a better buy. And actually SPY chart proves that also, because SPY is literally basically at the low end of the range. So yeah, if you are bullish the market and want to add or to initiate SPY is actually even better, and maybe tomorrow it's a good idea to buy some. Yeah, Bitcoin, Raphael was totally right. I mean, I was looking at it and I can't touch it, can't trade. So my trade, which is a DAX, index options to be there, and actually I opened a put debit spread, which is a short position. That position will expire in January. Monthly OPEX, I believe, is January 20th or something like that. But yeah, basically, when we had DAX at the top end of the range, and we had the slope, so basically a couple of days, basically just flirting with top end of the range, and of course it went higher and higher. I basically 3 days ago I initiated that because of course DAX volatility is insanely low. I believe we had like IV rank of 4 or 5. So yeah, that's also a very important metric in my position. So I thought, okay, I will buy put spreads. So yeah, the strike I'm short is below 20,000, and yeah, the strike I'm long is above. But yeah, we will see. We have basically 40 days for this trade to play out, and that's why I use options, because I don't want to have a huge overnight risk which can't be calculated. I like to calculate things. That's why I am playing with options. And yeah, so now I'm also short the DAX. So for me, again, there's no very scary signs, let's call it. There is no scary signs that the market wants to crash or that volatility wants to explode. I'm in the camp of buy the dip, and I'm watching defensive sectors and of course dollar and bonds to know which regime we are in, because I don't use any macro indicators for my regimes. My regimes are basically correlations between assets and also the relationship between different sectors in the S&P 500. That's how I play. Yeah, so this is the update on DAX. I touched on Hearst, which is, I think that everyone who has access to MFR should use correlations and Hearst, and these are two very, very important numbers. Yeah, so we can touch on bonds, because I know from Twitter that there are plenty of people who want to buy bonds, and you know that I'm always watching at TLT. Of course, there are other options and other term structures and durations, but I mean, maybe I'm missing something. Maybe I'm just too focused on the process, which is of course a good thing. But in what planet this chart looks buyable? Yeah, I see that regular term range is basically showing upside downside ratio, but look at the longer term range, look at the trend. Okay, what Hearst exponent is doing for TLT. Okay, we have it. Yeah, I mean, even though Hearst is decent, but actually I was I will say like this: if Hearst was low and very low, yeah, you could expect chop, but 67 is not high, but let's say decent Hearst exponent. In the future, I think that we will make it easier for people to watch not only the actual Hearst exponent, but the actual changes in Hearst exponent, because yeah, now it's possible, but it's not that straightforward. But yeah, if the Hearst was low, I would expect some chop. But now, I mean, come on. If you really want to buy bonds, buy when the chart and the signal supports it. Because now, out of like 5 signals that are part of my process, only one, which is a regular term range, is supporting that, and of course, trend is bearish. So yeah, keep that in mind. Yeah, so I'm not touching that. Regarding US dollar, I'm 100% with Raphael, so I have nothing to add on that. But of course, yeah, it plays a really major role in overall view as well. So now I will touch on one thing, because I had a question on Twitter, basically to talk about bullish, bearish, neutral when it comes to MFR trend. The question was actually basically to explain it without disclosing any secrets. I don't have any secrets. I mean, MFR trend uses volatility. Volatility is a quite important factor there. So it's not like some average of price or moving average or not moving, but it has quite a heavy component of volatility. And the best way to think of this is literally to look to this channel on TradingView, because trend is not like one price, which, let's say, above 100 it's bullish, below 100 it's bearish. It's not how it works in our models and in our process. So there is this area. In my case, it's yellow. Of course, you can change it, but there is this area where, for me, it's indecision. For me, it's indecision. It means that market is neutral, and we need some more clarity to have a bias, whether it's bullish or bearish. So yeah, and it's totally based on volatility, which is coming from different metrics. But yeah, it's the volatility part of the MFR trend, and how to think about it is, of course, very easy. I mean, bullish and bearish is straightforward, but I think that the question and the biggest confusion is what to do when it's neutral, what it means, and how to think about the neutral thing, because I'm sure that a majority of people are quite used to thinking about markets in terms of being bullish or bearish, but not neutral. So how I think about neutral is this: it's also not one-way street, so it's not very straightforward. If you have a position from before, neutral, actually, usually, if our signals are still supporting the position, neutral is not the area where I would get rid of the entire position. Usually, I scale down. So sell some because it was bullish or bearish, and now it's indecisive. So if I have a position, you can think of it scale down, but only if other signals are supporting your thesis. So of course, ranges, correlations, and so on. Now, if other signals are also turning, so yeah, of course, it's a place to get rid of a position. Don't reverse, but get rid. That's how I think of it. If you don't have a position, then it's a lot more straightforward. You do nothing with that asset, basically. It's neutral, you wait. Yeah, but I wanted to touch on that if you have a position, of course, it depends on your overall thesis and other signals that are part of the process. Either it's MFR signals or not, whatever you're using in your process. If our signals still support thesis, there are plenty of times when I don't get rid of the entire positions when it became neutral. But one thing for sure, I'm not entering positions in neutral. Doesn't matter what I think about it, but yeah, I respect the trend. So yeah, neutral area is the volatility zone where basically market needs to decide what it wants to do. I hope it helps. Yeah, so that's it from me.
Yeah, we have we have quite a few questions in the chat. I just wanted to revert back to my presentation. I forgot to show the sell signals on the single stocks, and then we go to the questions. Sorry, guys, just I forgot. Yeah, sorry. Yeah, another reason why I'm not buying the dip yet is so you can see Amazon sells here, and you can see the previous instances here, sells. What you get, sell off. Here, I mean, history should repeat, sell off. You have, let's check the other ones. Tesla, I don't remember if there are some sales, but let's have a look. Sales. So here, sales. Last time at sales, retest of trend. Sales. Let's see, Meta. Last time we had sales, so we had consolidation. This time we have sales, so probably either consolidation or sell. So that's why I'm not buying the dip yet. Okay, just wanted to point that out. And all of them, almost all of them, they look the same. Okay, so now let's go to the questions very quickly. And thank you, Raghav, for coming. So he had to leave for family issues. He had a hard stop 20 minutes ago. He stayed for another 10, but yeah. So Bryce is asking, can you elaborate more on how to use the buy daily scripts, the GLD trade, for example, what triggered for you to put that trade on? Okay, so the buy the dip script came from a very simple idea. I want to make my life easier. So I used to have I still have these scripts on my screen, right? But I used to have to interpret. Okay, so this script is saying that, this script is saying that, this script is saying that. But I want to have something that make it simpler, so that I know when I can put size on based on those scripts that I build. And then I can have a look, for example, at MFR, what the trend is saying, what the range are saying, etc. So and to basically to have two legs. One is all my scripts put into one, and MFR, what it's saying, to know, okay, now I can put a lot of size, and when this thing is gonna rip, I'm gonna make a shit ton of money. That was basically the idea of that, making my life simpler and being able to put size on. So the way the buy the dip script, so the one I share currently for free, but it's gonna be moved to MFR paywall by the end of this year. So only elite sub and the people with more than 150 tickers are gonna get access to it after it's over, right? When it triggers, it means all my scripts, all of them. I think I have like 6 or 7 different scripts that are used in combination for the buy the dip scripts. All of them, they are saying we are in a very, 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 very extreme setup. So it's oversold. Its volatility is very extreme. We are at a historic low in terms of price. The matrix is at minimum, etc., etc. All of this is saying, all of them at the same time, they are saying, okay, I'm at extreme. So I know that when it triggers, it's once in a year event, or I mean, if you are lucky, you may get like 2 triggers in a year, maybe 3, but it's very, very seldom. So that's point number 1. And I know it's yeah, very, very extreme. So I know, okay, this is the time. If I'm confident, I can put size on. Then what I do is I just check MFR. Okay, what's MFR saying? especially, do we have a cap? Do we have a cap on or not? So I don't remember for GLD if at the time we had a cap. I'm going to check very quickly for gold. And again, I was using JC. Yeah, checking quickly. Okay, here. The range are loading. Yeah, we actually had a cap on the very day the script trigger. The cap was at 2540. So you can imagine my script is saying this is a 1 in a year event and you should buy. And MFR is saying we have a cap to the downside. So you can imagine, and would you look at that and say, yeah, maybe I'm going to wait for it to go lower? Of course not. You're going to say, okay, I'm betting the house on it, and let's see. Another reason why I was quite confident is I had mentioned for several weeks prior to this that Vola trade was at the mean, and I was expecting a big sell-off that would take a lot of people by surprise. And remember, at the time, everybody was so bullish, etc. So when you started to see volatility increase, a lot of people were caught with their pants down. So they just, at the beginning, they tried to buy the dip, but after we broke trend, they were like, okay, I need to get out of this trade. So this is when you get the big sell-off. We went from, we went from, yeah, 2,800 to 2,540 in the span of 15 days. It took months to get to do this kind of move. So everybody was like panicking. So I knew that, okay, I had the possibility to buy people who were freaking out. So so the script was triggering at the right time, telling me, okay, people are freaking out. And you had MFR saying, okay, this is very good. All the scripts that triggers on my buy the dip script, they have been back tested. So you have a list on the script description. You have a list. It's a restrictive list. And this one I have back tested. I have made sure that when the trigger, you get a good chance to have to make quite a lot of money. So of course you need to check MFR just to be sure. You need to have a bias and you need to have back tested by yourself. But you can see when the trigger, etc. So I hope it replies to your question. Second, okay, Bryce again. Who does Raph use for macro? So I actually have two guys, two accounts I follow. One is global flows. I think it's his handle, global flows. You will find it very easily on Twitter. So I pay for access to that. And another one is Prometheus Research, who was recommended by Global Flow. So, and I really like their style. So yeah. How do you think about when Vola trade is in the middle of MFR range? Okay, very good question. So it actually depends. It actually depends what's your biases based on the signal. So let's say you have how to say. I need an example. So let's say, for example, you have a Vola pointing down on the Vola indicator. Vola is pointing down, Vola trade is pointing down. You are basically looking at a Vola profile that is very bearish. So volatility bearish, right? So asset is bullish. Volatility is very bearish. And you have range. So top of the range is above, the bottom of the range is below on the BVB daily. I think it's called like this on the price chart. So my first attempt, considering that volatility is very, very bearish, we are not at extreme. My first attempt is going to be to buy actually the retest of trade. So this is how I'm going to look at it. I'm going to try to buy this the trade first. And then I'm going to see for the next 2 or 3 days what happens. So are we holding? Are we breaking? Usually I'm going to have a stop a little bit below the trade. And the second attempt, if the first one fails, is going to be to buy the bottom of the range. But usually, if you end up in this kind of situation, when you have the trade in the middle of top of the range and low of the range, it's usually when you have very, very bearish profile for volatility of the asset. So yeah, that's the first thing I'm going to look at. What's the volatility profile? Volatility profile needs to be bearish. This is when I'm going to consider buying at the trade level. If we are at extreme, I will not even consider buying at trade. I'm going to wait for retest of trend or retest of low of the range, but definitely not buying the trade. So volatility profile is number one. Yeah, that's it. Vai, did you have any other questions that you received from?
No. No, I don't see any.
And
No.
yeah, again, for trade and trend, you need to backtest it. I mean, you have access to the script. And sure, I built it, but you can see, you can test it for every single asset. Have a look at Tesla, have a look at Netflix, have a look at QQQ, SPY, oil, gold. Have a look at them and you just screenshot. Okay, this is when I buy. This is when we have a change in trend. This is when I'm gonna buy, and you're gonna see it's gonna make your life much easier. You could have bought Bitcoin very easily when the trend shift happened. I think at the beginning of the year you could have bought gold also very nicely, and don't feel bad if you miss the opportunity because you will have many opportunities like this in a year. Trend shifts are very often, so just monitor a basket of stocks, assets that you are interested to buy. Make sure you see what happens regarding their volatility profile when they are about to switch and when you should buy. And yeah, you can actually also set up some alerts. So on TradingView, if you go to alerts, you can choose my script trade and trend, and you can say, okay, when trade and trend they cross, send me an alert. It's possible to set up that. Very easy. I have many alerts like that.
Yeah, actually, we have a question from Ted. So, yeah, and Ted is saying, watching the show right now, what's your take on the weakness in defensive factors and sectors right now? I know that I note that XLP had a good day, but XLU, XLRE, XLV, SPLV continue to break down. So maybe you will start if you have any.
Sorry, Vi. Can you say again?
What's your take on the weakness in defensive factors and sectors? XLP had a good day, but XLU, XLRE, XLV, and SPLV continue to break down. Are you watching defensive factors, and what do you take from it?
I think it's the same idea as with bonds. Basically, people are chasing they are chasing risk right now, and the way I see it is like we are in the last phase of the excess. Hence why for the past month I have been saying that I expect a top in Q1 before we see a significant dip to happen. So I think people are going to get out more and more of safety, and they're going to go out more and more to risk assets. Hence Bitcoin, and so Tesla, for instance, and all the crap that are rallying. and I would bet this is why you are seeing all the defensive stuff getting sold. They are pushed to go to risk, and because it's the last phase of this of the setup. It's always the same. That's my take, I would say.
Yeah, I watch it a lot. I will share my screen quickly, but yeah, I watch it a lot. But for me, the most important factor here is correlations. Now, if correlations would show different numbers, I would be concerned and worried. But now I just see basically the same scenario that we were talking for months, which is capital flows and rotation from risk off to risk on, and basically, well, it was not really strong risk off, but it was more of a ranging chop market. But now we are literally risk on, and why I'm saying that is because first, let's look into correlations and then into the actual change of correlations, which for me is maybe even more important. But XLP, no, let's start with 10 days. XLP, no correlation to SPY. XLRE, no correlation to SPY. XLU, well, 0.36 correlation. XLV, 0.19. So it's not concerning a lot. It's literally saying to me what I just mentioned about the flows. Let's go to 20 days, let's say. Okay, 20 days. XLU 0.12, XLRE 0.2. Yeah, okay. XLP is a bit different and XLV, but yeah, you get a point. Now let's take a look into 5-day changes in 20-day correlation. 20-day correlations actually is a number I rarely watch for, but it's a good to see the behavior in different periods. So correlation is going up, but I mean positively. So correlation is getting stronger, but still, it's not something that I would actually. I need to check the signals on XLP because today I was not looking at it, but others I see no concerns or warning signs in that regard. Let's go back to 10 days and see the changes, correlations, like I was talking. Yeah, basically that's what my main period that I start. I start always with 10 days. Then I just take a look at what's happening in 5 days, because sometimes they can give you signals about what can happen, but and then I go to 30 days. But yeah, I always start with 10 days, and yeah, correlations are either almost the same where they were or going down, and no surprise here. But yeah, I'm looking into correlations, and defensive defensive sectors are very important to me, but it's not like, oh, this one now is falling, this one now is going up. I'm just looking at the sector correlations and what's happening, because of course in my watch list I see, oh, okay, that thing went down, that thing turned bearish, but then I want to really see what it means from the correlation perspective, because what I meant when I said that if the numbers would be different, that would be worrying. If correlations, average correlations of these defensive sectors to SPY would be way above the normal values, and I will give you an example. For XLU, it would be like 0.7. If you see XLU correlation of like 0.7 in a 10-day or longer periods, I'm not talking about 5 days here, but in 10-day or longer periods, if you see 0.7 and it's breaking well, yeah, it could be a good warning sign, but now it's not. So yeah, let's quickly take a look at the XLP and what it says. And yeah, so okay, so we 0.47, basically the same performance today as SPY. So as the overall market, I believe it's literally the same, or maybe not. But it tried to neutral. It's now bullish. So and regular term range supports. Yeah, this one I will monitor more closely. Thank you, because actually it's quite interesting. But I want to see something a bit different here: XLP versus XLU. Yeah. Okay. Yeah. Basically, it was totally normal, but now XLP starts to behave interestingly. Well, but of course.
Short XLU.
Yeah. But of course, ranges disagree. But at least we had some momentum in XLP, which is nice to see. And the last thing from the correlations is, of course, this one. So if we go to XLU, and we will find XLP, XLU. Yeah, 0.57 between these two. Okay. Actually, good catch. But the only thing that raises questions and interests me here would be XLP, not others. So I hope it helps.
Yeah, well, two more questions from Niv. So one question was, is the BVB daily available? So yeah, I just checked. Sorry, it's because BVB was the original name of my scripts, but it's marketed as volatility trade and trend script on MFR. And you can, so you say you are premium subscriber. So to get access, either you have the elite subscription, or you have the premium plus at least 100 tickers extra subscription. So of course, I would encourage you to go to elite because you get more stuff. And how to access, on the left side, you have the tabs, and in extras, you're going to see the API and the scripts. And in the scripts, you select the scripts you want to get access to, and the platform, so TradingView or Sierra Charts. And regarding your second question, you have another question, Niv. It was Bitcoin is an asset where vola trade is between MFR. Yeah, but the problem is for Bitcoin, the issue is your main focus should not be on the fact that trade is between a range. Your main focus should be on the fact that if you look at the vola indicator, so I addressed this when I was talking about Bitcoin, vola is very choppy. It's doing like as if you have an earthquake with trade being the mean value, and vola is being that up, down, up, down, up, down, up, down. This is chop. This is not trending volatility, be it down or up trend volatility. So that's why it doesn't matter in this scenario that you have a trade between range, because your main focus should be on the fact that vola is choppy. Hence why you have a choppy asset, or could be something volatile about to happen. So that's it. I think we're good because we're already 1 hour and 30 minutes in.
Yeah, so if we don't have our questions, I really enjoyed the show and hope it was helpful to listeners. And as always, actually, it's great to receive questions. That's the goal, of course. The goal of the show is to make it as useful as possible, and of course, answering questions is what can really help. I hope so. So thanks, Raphael, and we want to thank Raghav for his insights, and hope to have him more often. So thanks everyone. Manage your risk. Hopefully see you in 2 weeks, but in 2 weeks I believe is Christmas, so we'll see about that. If we don't do the show before the Christmas, so of course, happy holidays, everyone. Manage your risk. Finish the year successfully.
Let's not ruin on some crazy trades, huh?
If you have a successful year, now it's the worst time to do anything. So bye everyone.
Bye guys, take care.